Hello guys, I'm going to do a chart breakdown of the 3 trades I took yesterday, and I'll just start from M15. I won't do the full chart breakdown from higher time frame, but I'll show you what I was looking at. Okay, if we go on the H1 from last week, we were bullish and we were hoping to see this high being taken, this high. Okay, we're looking for that high to be taken. So when that high got taken, this became our strong low on H1. Okay, so when that became a strong low on lower time frame, if you go on M15, you will see that we were bullish as well. Okay, the H1 level that we wanted to be broken is this one, and it also broke that level. Okay, so now on M15 we have a shared low with the H1, which is a strong low. As you can see, it created a QM here, okay, and broke a major structure here, and then it created a QM right here, okay, while it was going up. So this is a leg that is being created for, it's a shared leg with the H1 and M15. So we have two legs here. We have this leg, we have this leg, okay, and we have this leg, okay. So this is our M15 smaller range, and I was looking at if price breaks this range, we're going to look for price where it initially moved from, which is this one, to this one. This would be our bigger range, which would be the shared range with the H1. Okay, so I was bullish from the M15 on the smaller range and the M15 bigger range. Okay, so since we're bullish, I marked up my key levels. If we go to the daily, that's where I took my key levels from. So if you look at the daily, this is what we have. On the daily, we have the unmitigated wick here. Okay, so you can see I put my daily key level there, and we had our imbalance fill price action. There's a gap between this wick and this body closure. So I was looking at price coming to fill in that imbalance candle. Okay, those are my key levels. So going back to the M15, this is what we had. So we had an opposite QM here to confirm the M15 range. All right, so we had another QM here. So we have this leg is the M15 bullish range. All right, so after a bullish range, if we have an opposite QM, we expect a pullback. The pullback has started. So if we look here, we have inside structure of the lower time frame. All right, so if we have a look here, we have a QM here, break of structure, okay, run on liquidity and break of structure. That's our QM. Okay, if we go on M5, we can clearly see the M5 range. Okay, so after that, price came back to mitigate this one. Price came back to mitigate this level. Okay, after price mitigated that level, we had a range here. Let me just put the dots. Our M5 range from here to here. Okay, so now this can be a direct entry from here, but the session time is what I used here. I couldn't take this as a direct entry, though it had a QM here and a QM here, as you can see. So this is a confirmed range, and it also has internal range liquidity. Okay, so that's a valid point to take your sales. Okay, because it has both QMs and it has internal range liquidity lying just above this POI. But what was the time? It was a time where I was off the charts. But when I came now on Frankfurt Open, I then saw that this was a possible entry, okay, but wrong timing for me. Then price ran liquidity here and broke structure here, okay. And my Frankfurt open was right here, okay. Let me just make that bold. Okay, so my Frankfurt open was there. Okay, so now we have a run on liquidity and break of structure. We have a smaller range that has been created. I'll go to M1 for this one. M1, run on liquidity, break of structure. Remember the M5 is having a bearish range. So this range has the external liquidity just here. Okay, that's the external range liquidity of the M5. Okay, so this would be my target. So after the M5 created a QM here, on the lower time frame, I should see a range. Okay, I went to my M1. On my M1 now, this is what we have. The run on liquidity, break of structure, okay, and this structure was a strong low. If you see it, there's a run on liquidity here, okay, and a break of structure here, and a break of major structure. So that was a strong low. So on M1, it had confirmed that it's now going down. The M5 pullback has been completed. Then what do we have? We have here a run on liquidity, okay, and a break of structure. All right, here. So now this confirms our red range, which is our M1 range. So now, after confirming this M1 range, this just means that the M1 is pulling back. Okay, if the M1 is pulling back, it's going to take some internal range liquidity. So here we have a 3 candle formation here and here. So I was expecting at least this to go. This might go, or this might not go. Okay, so this is also internal range liquidity. So what do I do when I see a situation like this? I look for a higher time frame POI that aligns with liquidity on top of that higher time frame key level. So now I was looking for sells. All right. So when price came here, it didn't come into a level that I was looking at to take out liquidity here and get a sell. Then price broke this structure. Right. Now I'm on my Frankfurt open. Okay, so price broke structure here with just a wick and completely started to reverse. So this was most likely a fake BOS. So if it's a fake BOS, what I'm going to do is I won't take any trades inside this range, because that's simply a trap. Okay, because price is most likely to come and use this as liquidity. Okay, this is liquidity. So I'll remove the Frankfurt line so that the chart is clean. Okay, so price will come and take that as liquidity to form what we call a T1. This is how a T1 looks. So after having this range, I went to my higher time frame from H4, H1, 30 minute to see which higher time frame key level it aligns with, so I can take myself. So here, as you can see, using this, we have an unmitigated wick here, which can be our key level. All right, and if we go H4, we start from H4. From H4, we have nothing. As you can see, the range, the red range is from here to here, and we just have this wick and nothing is clear. On H1, we have this unmitigated wick. You see, this range is from there to here. Okay, so what is our key level here? Our key level is the unmitigated wick. See that? So the higher time frame key level is what's important. It's stronger than the lower time frame key levels. So after seeing this one, I then went to my M1, used the H1 unmitigated wick, and what validates this key level is that there is liquidity on top of that level. Okay, so price, yes, came to take out this level, but at times it doesn't even take this one. It will just come and bounce here with this first wick, and then it'll go. Then you ask yourself why it didn't take out this three-candle formation. It's because of the key levels of the higher time frame. So seeing that, took out my trade here, and my target would be, the safe target would be the external range liquidity of the red range, but I know that we have an M5 range where we could target the external range liquidity of the M5. Okay, then my stop loss was just above here. I think 2.3 was on M1. This high is a protected high. Okay, so that was my safe stop loss above this. If it took that, it would most likely take this high and then continue bullish. All right, so I took the trade from there and exit right there. That was a beautiful Frankfurt open. Okay, so now because I'm bullish on my M15, all right, because I'm bullish on my M15 here, the daily cycle I was expecting was a normal daily cycle where you have, so a normal daily cycle is when you have a QM, okay, yeah, then price pushes up and you have another QM there, okay, then price comes back. In Asia it consolidates, okay. After Asia consolidates, price will either in Frankfurt take this liquidity here, mitigate a POI here, and then continue. That's a normal day I was expecting. And other days we have what we call Asia sweep, and then it will continue in London. So price can come here and take this liquidity, okay, mitigate a POI here. This is when you can take a counter trade in Frankfurt and target this low, and then again look for buys in the POI of the M15 range, then go up. Okay, so what we had to the last session was a normal day. All right, so now I knew that price was going to take out this liquidity and mitigate something here and go up. All right, I don't really take direct entries because I didn't really take a direct entry here because we had liquidity here, and yeah, so that's why I didn't take the direct entry here. Some of the guys took the direct entry here, and it was good because it might have just gone up to take out this previous day high. So now, when price mitigated this week and people took the buys, I was waiting for a confirmation to buy. So on lower time frame here, I was looking for a T1 or T2. Okay, then price broke this strong high. Price broke this strong high. All right, that's a strong high. It was broken here. After this was broken, I was looking at this as internal range liquidity. Okay, so I was hoping price would break there and come and take me in. I put my order somewhere here, I think. I put my order somewhere here. Okay, put my order somewhere there. Stop loss under the protected low, and then my target was up there. But what happened? Price came down, didn't take me in, and it went up. So now why I chose to sell instead of continue with my buy is if I go on M15, remember price is bullish, okay? Then when it went high, this low was supposed to take out a at least minimum this high. Okay, for us to confirm that the M15 has created a QM to confirm that it's now bullish. All right, so now we had this range from here. We have this range from there to there. Okay, that's our bearish internal range. All right, so if the internal range is still bearish, if you want your M15 to be bullish, the internal range is supposed to switch to bullish. So this level was supposed to be broken. So when it didn't get broken, and I saw a QM being created here, a 3 candle formation being taken, I knew that this was a failure swing and price needed to take this as liquidity. Okay, this would be our liquidity of the lower time frame range. So now, when it got here and reversed, took out this low, I wanted to buy here, but I am not going to buy because it's a failure swing, so it's most likely going to take this one out. So I was just expecting this to break down, but what did it do? It gave me an entry on lower time frame. So if I go on lower time frame, what do I have? On M15, on M5, this is what I took. Okay, I have a breaker block here. I have a breaker block here. Ah, my God. I have a breaker block there. Okay, so when it took out this one, it confirmed that it was going to take this low. So my first entry was here on the breaker block, on this range. Okay, took that with the 2 pip stop loss. Yep, took that with the 2 pip stop loss, and then my target was external range liquidity. As you can see, this range is the same range that was created in Frankfurt. All right, so when I took that one, and when price came down, I think on M1, it created a strong high, and I went on break even. So when price came here and created this strong high, this is a run on liquidity and a breakout structure. I was expecting this high to be protected, so I was hoping this would just tank down. So I put my break even. Then what happened? Price came up, and I saw that I'm going to be taken out on break even because it took this protected high. So if it took this protected high, it's the same logic that I was explaining here, that this becomes liquidity. Okay, if that became liquidity, this became liquidity, then this is a T2 setup. Okay, failure swing, it will come and take this as liquidity. Okay, that is liquidity, and continue down. All right, so now I know that I have a red range here, from here to here. So this is my protected high. And price came here, I was expecting a T1. Took it, failed to take this one. So if it failed to take this one, this becomes a failure swing as liquidity, and it will be run. The same thing I was explaining here. The same thing I was explaining here, that it became a failure swing and price came back. So now, this is now my failure swing. I'm anticipating to be taken break even. Then I went to my high time frame. I think I took it from M15. M15 we had nothing here, so it was M5. Was it M5 or H1? Let me see where I took it from. So H1 nothing, M30. Yeah, it was 30 minutes. So on 30 minutes, I saw my key level here. Okay, just here. Okay, that key level is just above the liquidity. All right. So you can see that liquidity is going to be run, and my key level is just above it. So that's where I took my sell. right here, and my protected high is this one. That's where I put my stop loss, above this one, which was a 3.5 pip stop loss. And my target still was the external range liquidity right here for a 3.31% profit. So as you can see, at times you want a very tight stop loss, like this stop loss. You get tagged out wanting a 14-hour, and your psychology can be messed up. So that's why I always use safe stop losses. Here I used a 2 pip stop loss because I did not see any internal range liquidity here. Okay, so I was hoping that it would just take this and come down. So that's why I used a smaller stop loss. But now here, it had chances to pull back even more because of the timing. This was not New York open, so price could simply go up, then come down. So that's why I also used a safe stop loss. So this is the breakdown of the trades I took yesterday on the previous session. So I hope you guys learn something and understand why I took the sells instead of the buys. But you can see here, price also didn't break the smaller range of the M15 low here. This remained protected. As you can see, this remained protected. Price didn't break that and took our previous day high as liquidity, continued bullish with our bullish bias. But I wouldn't trade this as a direct entry, so I just left my chart as soon as price was somewhere here. Okay, because I knew it was going to go and break the previous day high. So I hope this has helped someone, and thank you for watching.